The backtester tool that you'll find at the index trading system basically allows you to access our proprietary database of signals and run your own tests and create your own trading strategies. Some of the things that you can test, as you can see, you can pick a starting date, and we start back here in late towards the end of 2008. That's when the ETFs TZA and TNA first came out, and we're using those ETFs in our back testing to show you the results. We use the returns, their daily closing prices to determine if settings are profitable and for our back testing. All right, so you can set any time frame that you want over here, and then you can choose any of our settings. Now, there is a 6 time settings going from 1 to 6, with 6 being the longest time. So what we're timing here is a move up in the market or a move down in the market. And is that move going to occur over a short time period, which would be a 1, or will it occur over a really long time period, which would be a 6? And of course, you have anywhere else in between on these others. Now, the other side is your volatility, and that one has only got 3 different ones. Volatility is how high it takes to go up or how low it'll drop. 0 is small ups and downs, 1 is medium ups and downs, and 2 is bigger ups and downs. So just to give you an idea, when we're using 2-1 here, that's basically a short time frame with a medium up and down. That's what we're going to be testing for. Now, while we're testing, we can choose to exclude an ETF. So if we want to test only, what would happen if we only invested for the upside and we skipped the downside and just went to cash and reduced our exposure? And to do that, you would put TZA, because that's the ETF that goes up when the market goes down. So you would exclude that one, and you can get the results of just TNA, and vice versa. So of course, you can use stop losses. We recommend 8% stop loss with TZA and no stop loss on TNA, which is the upside. And then you can also trade the bullish and bearish markets, okay? And basically what this is doing is just the opposite. The buy dates are exactly the same, except that bearish, let's say the bullish says to buy TNA, and then if you trade the bearish, it'll say buy TZA. So it's just doing the opposite. Anyway, on the back tester, you're allowed to test only one setting at a time. So we've got some parameters set in to submit. It will take a $1,000 hypothetical portfolio, and it'll show you on that date, and then it'll say, oh yeah, there was a buy, and TNA was at 71.62, and it'll show you, it'll go day by day. So if you were actually trading this, you could see that your portfolio started with 1,000, then it jumped to the first day, 24, 41, 56. So it's going up, and then here's the drawdown. It's showing you a new highs. It shows you how far down from the new high it's gone, and it'll keep doing this for that whole year. I do want to mention here, because it is right here. You see the T right here? That means the stop loss was triggered. So we had bought TZA, and 3 days later, it triggered the stop loss. So if our order would have executed, we would have exited TZA, and we would be sitting in cash at this time. Be in cash all this time, and eventually it says here would be the time to buy TNA on the 5th. And so there it is. It's marked our 8% stop loss. We sold at 13.76, and the stop was triggered. All right, that concludes this video on the back tester. We hope you found this helpful, and check out some of the other videos on the other tools for the index trading system.